And joining us now to talk about Tuesday's market trade action, we welcome in Jim McCormick with agmarket.net. Jim, great to catch up with you again, sir. How are you?
I'm doing well, Jesse. Good afternoon, and good afternoon to your listeners.
Well, I appreciate the time, Jim. Let's jump right in. Pretty much a risk-off tone to this market trade today, whether it's grains, oil seeds, energies, stock market. Really, livestock was the only market that had green on the screen on the day, but it just felt like a fairly risk-off tone, although corn and beans did come well off their lows by the time we got to the close. So, I mean, just talk about overall general thoughts with this risk-off kind of sentiment here on the day.
All right, let's start with the macro picture right now. We've had a lot of volatility recently. Specifically, you had a lot of people buy commodities early in the year, Jesse, on the inflationary play. And then Chairman Powell came out and said, hey, my goal is to kill inflation. Unfortunately, when you think about it, when they're trying to slow down inflation, what are they essentially telling the public? They're going to essentially drive down the demand for products, which that essentially caused a lot of money to exit all the commodities, not just the grains, but a lot of the commodities in general. And then, even the stock market went down. And then eventually you started seeing kind of a rebound in a lot of these commodities. As people were kind of thinking, well, maybe Powell isn't going to be quite as aggressive in fighting in inflation. There was already talk about when they might cut interest rates. Well, then on Friday at a Jackson Hole meeting, Chairman Powell came out and said, look, we are not done fighting inflation. We are going to continue to fight inflation. And then I think he said the part out loud that a lot of people knew was going to happen. He said, look, there's going to be pain when we fight inflation. There's going to be households that are going to be hit. There are going to be businesses that are going to be hit. And I think that kind of caused a little bit of exodus of money back out of the commodities today as people realize there is more pain coming down the line, unfortunately. That's on the macro front. And then on the grain front, it's just a little bit more of what's going on in the world right now. I think the bean story is probably the one that's the most negative at the moment.
Well, and talking a little bit about that bean story, obviously we've seen the crop tour last week. We got that yield estimate that was pretty much in line with USDA. Some good rains in parts of the belt that could help out soybeans here as we get to closer to the finish line. So I would agree with you. It feels like that soybean story is getting a bit more bearish here as we move into the month of September. Is that your kind of feel to the soybean market right now?
Definitely. I mean, I think the pro farmer kind of confirmed what a lot of people are thinking about it. But then more importantly, we've had a lot of rain that's moved across a good portion of the country. I know Iowa caught some rains over the weekends. There was a cold front that came through yesterday that dropped a lot of rain in parts of Illinois and Indiana as it went east. And talking to customers who got that rain, it was a good rain, 1 to 3 inches. They are much more optimistic about getting that final flush of beans on the on those plants. So the psychology of the farmer, I think, is a little bit more negative, more confident the crop's there. And then on top of it, there's been a lot of stories out of South America as they're preparing to get this crop planted. Now, right now, they are a little bit dry, but they're always dry this time of season. But if the monsoon season comes as expected, the argument is they're going to have 151 million metric ton bean crop, the biggest crop ever, using a combination of increased acres as well as yield. So now you're looking at a country, us having potentially a record crop. Now you got the South American crop that potentially could be a record crop. And then on top of it, what's going on is who's the biggest consumer of beans in the world, Jesse? That is China. And China is doing really not that well, to be quite honest. Economically, they're fighting a housing crisis. It's kind of off the headline story, but their housing crisis is still ongoing. They still have COVID, believe it or not. I mean, you wouldn't believe COVID's going on here in the United States, but in there, they're still locking down portions of the country due to COVID, which has got people concerned about, the economic activity, which would be weak for demand potentially down the line. And then lastly, you do have the political aspect of it. The reality is the Chinese are still not really thrilled with the United States and, the whole Taiwan issue. We just recently sent some ships across the Taiwan Strait. So there's a little bit of political fear of maybe politically, maybe there'll be pressure to move away from U.S. beans if at all possible. So, the bean market right now, to me, feels like it could be the weakest link at the moment.
Well, on the flip side of that, the corn market feels like it's got some decent chart signals here and maybe some more bullish momentum to it, even though we had a bit of pressure on Tuesday's action. But if we think about the declining yield potential, especially the Western belt, that seems to be one of the reasons. But to me, it feels like this corn market might have some legs under it if some things verify here as we get into the month of September, Jim.
I agree. I mean, right now, Jesse, I'm a little bit negative near term. And what I'm looking at right now is we've had a heck of a run on the pro farmer number. I think, like I said, we had a lot of speculator money, I believe, come into the marketplace. A lot of fund money from New York, I think, came in. It was interesting. If you look who was on the tour, we heard you had your traditional farmers, but you also had journalists from the Wall Street Journal on that tour. You had journalists from Bloomberg on the tour. So you were getting a lot of maybe New York money that normally doesn't pay attention to this tour, really looking at it as they're worried about the price of food around the world. And I think that sucks some money into the system. And now that money's into the system, we've had a good run up. The argument's going to be who's going to be there to carry the ball the next 20, 30, 40 cents near term. The farmers, I believe, if we start harvesting, we've heard some guys will start harvesting in Iowa at the beginning of next week on some of the drier corn. So you're going to have harvest pressure particularly kick in. And then, like I was mentioned earlier, you have the macro picture, which definitely looks negative. Crude oil markets at down over $5 right now today. So is that going to suck some of that money in that came in to kind of maybe come back out near term? And you could see it. One other note, we did a little bit of research. If you look what happened coming out of the holiday weekends, we were down 25, 30 cents roughly, I believe, coming out of Memorial Day weekend. We broke hard coming out of the Juneteenth Father's Day's weekend. We were down 40 plus cents. And then 2 weeks later, we came out of the 4th of July weekend and the bears were growling again and we clobbered the market a third time for the holiday weekend, coming out of the holiday weekend. The question now is, is the fourth time a charm? And we're going to see another down liquidation pressure coming out this weekend as harvest activity progresses. So I wouldn't be surprised to see a little bit of near-term pressure, but overall, I think you have to be a little bit bullish on the corn as this crop continues to shrink. The world balance sheet continues to tighten. I believe it's going to tighten even more, Jesse, because I don't think they're done cutting the European crop. And then on top of it, to keep that balance sheet somewhat intact, they're using a record supply out of South America by roughly 12 million metric tons. So we'll see what happens. And then lastly, kind of an interesting situation that we've heard in the last couple of days is nitrogen. You can't get a bid all of a sudden. I mean, all of a sudden, like if you want to try to buy it right now, good luck. Most offers have pulled the bids, and as far as I know, no one's always certain when there will be offers out there to sell, that key component to producing corn. So are you going to start getting people a little bit worried that maybe we're going to see a little bit more bean acres, a little bit less corn acres as people can't lock in these costs and saying, hey, maybe I'll go ahead and take the 1350 beans and lock in some new crop beans, and maybe we could see an acreage shift. It's awful early to be talking acreage, but it's something I think is going to be discussed within the industry.
Well, Jim, you brought up a great point with the holiday weekend coming up, and I think that leads us a little bit of thought to just the fact of how we could see a lot of volatility in the markets surrounding a holiday weekend coming up to and coming out of. But also, I think that's a good spot for us to remind folks that it's not necessarily sometimes really about the day-to-day. It's about the overall marketing plan. So getting caught up in some of this potential volatility heading into a holiday weekend, you can look at it, but try not to get yourself too caught up in it. I think that's a good point to remember, isn't it?
Oh, no doubt about it. I mean, our group right now continues to argue, it's profit over price. Look at your numbers. I mean, it's definitely a very variable crop area. Some areas are definitely struggling. I mean, I've talked to some producers today that, they thought they have 30% of their beans sold, and they think it could be more closer to 50% because simply they're not getting the rain. But on the other hand, you've got producers who have caught some of these late season rains, and now they're looking at what could be some of the best beans ever. So where they thought they may be 30, 40% sold, maybe they're closer to 20. So, over the holiday weekend, before you really hit that full stride of harvest, maybe it's a good time to kind of look at your fields and maybe try to rebalance where you're at and come up with maybe make your adjustments to the marketing plan, but also really take a serious approach to start looking at going into the 2023 situation. I realize when you look at the volatility this summer, it's some of the most extreme moves we've ever seen, but there's been some incredibly good opportunities. And we're saying the same thing for 2023. our group says, hey, if you can start locking in profits, when you look at the economy of the world potentially slowing down, unfortunately, that's something we got to do. I mean, right now, Jess, I think most people would probably agree, especially on the corn market, the crop is definitely getting smaller. But the real question I think we have is, where's the demand going to be? That's the moving target. Is the livestock industry going to get beat up because of lack of consumers being affordability? Is the gas industry going to not need as much ethanol because the world's slowing down and driving? China, like I said, on the beans, their economy slows down. So the demand part of the argument, I think, is much more harder to pin down. So that falls back to, if you have an opportunity group to pretty much say, look, I can start laying off risk and guaranteeing myself profitability, we think that's a very pragmatic thing to do, plain and simple.
Jim, let's talk the wheat market. That was the weakest link of the three grains on Tuesday's session. And I would have to imagine that goes back to the macro picture with all the concerns of recession, not just in the U.S., but worldwide. And also, I know the trade's still watching all the issues in Russia, Ukraine, but it feels like that was more just a case of the macro picture on wheat on Tuesday. Is there anything else that you saw in the wheat markets that kind of added to the pressure?
Well, we had the big run up on Monday, and I think that caught the trade by surprise how quick it ran up. There was talk on Monday, Jesse, I don't know if you heard about it, that supposedly there was people saying, well, the Russians were going to not re-up those grain corridors. Those grain corridors was like a 60-day agreement. They got to re-up the agreement in October, and there's a few people speculating that they wouldn't do it. I think that kind of got the trade's attention. My personal opinion, I think Russia's going to up it. The reality is they don't want to look like the bad guy. They sell a lot of that Ukrainian grain goes to Africa. Russia doesn't want Africa to turn against them. But, on the other hand, if you look where the world supply is, if you take Russia out of the equation, we've got some of the tightest world stocks to use ever in reality. But Russia's got such a huge crop. It is it's taking some of the pressure off. So I guess if you really want to be hardcore in Russia, you want to kneecap your competition, don't let the ships out of the Ukraine. So that could change it. And if for some reason that would change, I think the market would go right back up. I mean, if you look at the price of wheat, we're pretty much lower than we were pre-war. I think if anything, the world market's might be a little bit too laissez-faire about what's going on in that region of the world. I mean, all it's going to take is one ship to actually get hit by a rocket, and it's going to change the dynamic. But right now, the market does seem a little bit confident that the world's going to get the grain. The U.S., unfortunately, right now is, both French and German wheat is being sold $40 to $50 a ton cheaper than we're marketing our wheat. Part of that is the U.S. dollar, so we're not competitively priced. I do believe in the long run, the wheat market's trying to put in a base, though, as we were just kind of consolidating the last couple months. And we'll see what happens in the winter wheat planting season with how dry it is in parts of the Midwest. Dry in the plains, dry in Europe. The wheat market could get interesting if the market gets nervous that the winter wheat crop is faltering. But right now, spring wheat harvest looks good. The Canadian wheat harvest looks good. So the wheat market probably going to struggle, at least near term.
Well, Jim, let's talk livestock. Good news, some green numbers to talk about on Tuesday's session in cattle and hogs. Just for starters, in this hog market, it feels like we've maybe found some support here after we pulled back in quite a few sessions there in the month of August. So talk about this hog market first. What are your thoughts there with what we're seeing, and maybe, again, finding maybe a little bit of a floor, a little support here, at least it appears. Is that your thought?
I think you nailed it. We're massively oversold. We found some technical support on that side of the issue. We're also quite a bit of discount to the cash market. So I think you're seeing a little bit of short covering. It is also the last couple of days of the month, so you're probably driving a little bit of bears to book some profits. But we are oversold technically, and I think that will hopefully continue to get a little bit more bounce at least the next couple of days as we wrap up August. Excuse me.
Well, wrap up August, move into September. Cattle market, haven't seen a whole lot of cash activity yet this week. What's your thoughts on cattle?
Right now, the cattle market, I think it's really kind of going to be an interesting dynamic on the cattle market. I mean, overall, it's trying to bounce at this point in time. I think it could go a couple dollars lower near term as it's more of a sideways range. I mean, the cattle market, you're getting such mixed cross signals from the macro picture. You look at your stock market portfolio, it absolutely got hammered on Friday. So it doesn't make you feel really good about that. But on the other hand, the price of gas has really quieted down quite a bit. And that is definitely giving the consumer quite a little bit of relief at this point in time. So that's a little bit supportive. You also got the last holiday weekend of the year. Maybe that's going to be a little bit supportive. But then we pull back to what we're seeing, what's going on in the southern corn belt, Kansas specifically. Any producers in Kansas know right now, that is it's really going to be a problem trying to get enough grain in that part of the world to feed the livestock right now. And we're going to have to be shipping grain in from other parts of the country. And then you're going to get to the situation, can you justify the cost? So we are fearful, at least near term, you could see a little bit of liquidation of this livestock sector as people just choose to get out of the industry because they can't afford it. So you could see a little bit of negativity if you do see some more continued liquidation near term. But if you see that liquidation near term, it could potentially be very bullish long term as that supply tightens up. And if the economy stays halfway intact, eventually you're going to see that market go back up because the economy right now really is kind of a two dynamic economy. If you're unfortunate at the lower end of the economy, you're struggling. There's no doubt about it. But if you're in that upper end of the economy right now, it still seems like they're out and moving. I will tell you, I live outside of Chicago, and I actually had the pleasure of driving around Chicago over the weekend to head to southern Indiana, where my family's from, and it took about an extra hour to get through Chicago. Plain and simple, I hadn't seen traffic this bad around Chicago on the weekend since the pandemic. So there's still a lot of people traveling. So hopefully that's a good sign that eventually that'll keep some of the underpinning of the livestock market as well.
Well, Jim, fantastic stuff. Real quick, any other final thoughts before we let you go today?
Right now, volatility has been incredibly high the last couple of weeks, last couple of months. At this point in time, producers, I think it's going to continue. Place your orders, be ready to market when you get rallies. And I think in the long run, look for ways to reown this corn market because any kind of hiccup in South America, I think could really send this market back up to the highs, plain and simple.
Well, Jim, if producers need some advice, I know you and the agmarket.net team can help them out. What's going to be the best way to get a hold of you guys?
You know what? Go to our website, agmarket.net, sign up for our research, or better yet, call any of the Ag Market team members at 844-424-6758.
Jim, always a pleasure, sir. Thanks for joining us today, and have a great week. We'll talk to you again soon.
Thank you again for having me on. I appreciate it.
Jim McCormick with agmarket.net. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.